I think one of the most important things that's happened in the last month is as the news got worse on the Strait of Hormuz, oil prices continued to move lower. We've seen no ships go through, yet the urea price in New Orleans has collapsed back to lower than it was, meaning fertilizer. Somehow or another, the world had the most important thing shut down and nothing changed. It is very difficult for Bitcoin to be traveling higher if all the money is going into stuff that is based on earnings. Mm-hmm. And we're running into the second quarter. I believe the second quarter will be more of a disappointment for earnings than the first quarter.
Bitcoin is flashing a clear warning signal as market momentum fades and capital rotates toward high-growth AI-driven assets. With volatility rising and conviction weakening, investors are questioning where the next major trend will emerge. Bitcoin remains stuck in a bear market, and Jordi Visser argues that investors should not ignore what the charts are signaling. Despite multiple rally attempts, Bitcoin has repeatedly failed to hold above key moving averages, reinforcing the view that momentum remains weak. Until the asset can decisively reclaim its 200-day moving average, the broader trend continues to favor caution rather than aggressive bullish positioning. Visser also highlights an interesting comparison between Bitcoin and SpaceX. Both assets are heavily influenced by expectations about the future rather than traditional valuation metrics. That distinction has produced very different results over the past year. A $1,000 investment in SpaceX at its IPO would have grown to approximately $1,489, while the same amount invested in Bitcoin would have fallen to about $615. The contrast shows how capital has recently rewarded growth narratives outside the crypto market. The next major catalyst could come from corporate earnings. While profits are still expected to expand, market expectations have climbed to extremely high levels. If second quarter results fail to justify current optimism, money could begin rotating away from AI-driven trades and other earnings-focused investments. Such a shift could create a more favorable environment for Bitcoin. However, if AI-related assets continue delivering exceptional performance, Bitcoin may struggle to attract fresh capital as investors chase stronger momentum elsewhere. Bitcoin remains a market driven by sentiment, liquidity, and timing rather than certainty. Stay alert to shifting capital flows, share your view in the comments, and subscribe for more deep market breakdowns.
First of all, it's in a bear market. I'm going to say it every single day until it's not in a bear market. When we break above the 200-day moving average, it will change. Until that happens, it is a bear market. Every single time it runs into any moving average, the most recent one was the 20 moving average, it falls back down. You mentioned the money going into AI. When SpaceX happened this week and it became obvious, SpaceX and Bitcoin are basically to me the same thing. Like SpaceX is a futuristic.
They're both going to the moon.
Well, they're both based on a belief that people have in the future. Yeah. They're not about anything fundamental right now. Like it's very hard to make an argument as to the fundamentals behind this. I love when people send me things and they're going, "You're wrong. SpaceX is overvalued." I'm like, no, when something doesn't have a valuation, it can't be overvalued or undervalued. Yeah. It has no valuation. It's a complete guess. We're talking about flying to Mars. We're talking about flying to the moon and building space stations. Like this is a dream. So Bitcoin has no energy because it is a vehicle meant for two things. One is for people to hide their money from the government, but that is always going to be a small portion of it because the wealthiest people on the planet, which is where it draws its money from, aren't hiding their money from anyone at this point because they're not taking it. On the other side is the energy that comes from retail and the energy that comes from momentum. It has no momentum right now. Every week there's more people. Now you've got strategy has brought people's attention. They're looking at the way STRC is trading and it's down to everybody has a viewpoint on it. I'm going to keep saying the same thing. It is very difficult for Bitcoin to be traveling higher if all the money is going into stuff that is based on earnings. Mm-hmm. And we're running into the second quarter. I believe the second quarter will be more of a disappointment for earnings than the first quarter. Not that it won't grow, but now the expectations are so high.
22% earnings growth.
Exactly. So if the stock market is unchanged from now until September, well, that's a better environment for Bitcoin than one where AI continues to go at 50% a month or 50% a quarter. Because if it keeps doing that, I do believe, like you said 6 weeks ago. You're talking to people in Korea. It's like they used to be a big player in Bitcoin, not there. Retail will migrate to what's working. And right now, Bitcoin is in a bear market. We need to see it change. And I'm going to emphasize this point again and again. Never believe you're smarter than the market, ever. The market knows. I had a day on Friday in my own, or Thursday on my own portfolio. I finished up on the day. I have 20 stocks that I own, including Bitcoin. 18 of the 20 were down. 2 were up. Those 2, Marvell and Entegris, they made up for everything of the other ones. But silver was down, Bitcoin was down, Eli Lilly was down. All of these things that we've talked about over the time, they were all down. When I'm hoping Bitcoin and these other things are working, it's when there's a pause in all of the AI stuff, but we're not there yet.
Federal Reserve policy signals are increasingly being interpreted through an exaggerated market lens, with rate expectations and inflation fears swinging far beyond underlying economic reality. Jordi Visser reveals that investors consistently overreact to short-term commentary, even as long-term yields remain largely range-bound since 2022 despite repeated concerns over debt pressures and inflation spikes. Since 2021, the upward shift in interest rates has primarily reflected prior Federal Reserve tightening rather than an uncontrolled market-driven surge. At the same time, attention is shifting toward how inflation is measured, with greater emphasis on trimmed mean and median readings that filter out extreme price distortions. Jordi Visser reveals that this approach suggests inflation is stabilizing closer to a 3% range rather than accelerating in a sustained way. Even geopolitical risk events and commodity shocks have failed to produce lasting upward pressure, as seen in recent declines in oil-linked inputs such as fertilizer pricing despite heightened tensions around the Strait of Hormuz. Market volatility is further reflected in short-term instruments, with 2-year Treasury yields holding near 4.17% after a sharp 13 basis point spike, marking the largest jump since April 2025 and the biggest Fed day move since 2008. Meanwhile, nearly half of Federal Reserve members still project additional rate hikes, keeping monetary uncertainty elevated and reinforcing volatility across risk assets including Bitcoin and crypto markets. Let's get back to the interview.
I think what we learned is he's going to be very different than Jerome Powell, and he has said that. He has very different views. I think the reaction by the media was just like the oil doomers and just like every other issue that has popped up. Tariffs are going to take down the country. Oh, he was hawkish. He wasn't hawkish. It's ridiculous. 10-year rates have been stuck in a range now since 2022. And in this weekend, I'm going to highlight to people, the only reason rates went higher over the course of since 2021 is because the Fed raised rates. Yes.
It's funny how that works.
Yeah. But that's it. Like everyone who's worried about the debt, everyone who's worried, they're going to go higher. Every time it ticks higher for a week, then everyone comes out and says the world's going to end. Then it ticks right back down. 2 things that happen. Number one, he's a believer in productivity. He announced task forces. Now, my kind of thought on the task forces, he believes, which I do as well, and I think a lot of younger people, non-academic, and I consider myself non-academic because of how much I hated school, but I understand macroeconomics extremely well. I think the Fed has been in the habit since 2009 of micromanaging everything. Every word, every speech. It's ridiculous. At the end of the day, they do very little unless they have to come in and save something. That's it. Like, they're not moving rates much at all. They're going to cut 25. Nope, now they're going to raise 25. Who cares? It's not going to change anything. It's a function where the market gets overly dramatic with it. So the task force to me is, are we looking at this the right way? And I have said repeatedly, GDP by itself is a horrible measure of an AI world. But let's use inflation. He has been very outspoken that he thinks the way we think of inflation and goes through it is wrong. He did not change, and he won't change, the target inflation rate. And the reason is because we're kind of trapped into that. If he came out and said, I don't actually think the 2% means anything, we're going to go back to something else. But what he did say with inflation and what he said publicly is, I think the trimmed mean is a much better measure. And I completely agree. I believe in getting rid of these things that are way on the bottom, way on the top, and just kind of sticking with where the bulk of things are. using the median, and every single part of the median and trimmed mean, it's been getting in a tighter range, meaning most things are kind of in this point of like 3%. And the extremes with oil and with all this stuff, it blew out. I think one of the most important things that's happened in the last month is as the news got worse on the Strait of Hormuz, oil prices continued to move lower. We've seen no ships go through, yet the urea price in New Orleans has collapsed back to lower than it was, meaning fertilizer. Somehow or another, the world had the most important thing shut down and nothing changed. How is oil ever going to sustain an up move at this point if it didn't just do it now? Now, maybe that'll change over the summer as we hit rock bottom, but I learned with prices, that's a warning sign. And the reason that matters is 1-year inflation swaps, which are the only thing that has led the rise up in 2022 from the Fed. It led the entire time. Said, okay, inflation's going higher. It collapsed over the course of the last 2 weeks. So all the crap I gave to Trueflation, even though we did get above 4% and they broke away from their CPI kind of guide, it stayed near what the median did and what the mean did. And now we have a Fed chair that's trying to create a task force to agree that, okay, we shouldn't be watching this thing. I think that means actually at the end of the day, when they focus on inflation, that they're going to realize that it's actually lower than what we thought it would be. And if it couldn't go higher with that, how is it actually going to go higher when you strip out memory prices and you strip out all these one-off things?
Mm-hmm.
Overall market structure suggests that Bitcoin's direction remains tightly linked to liquidity rotation rather than isolated crypto fundamentals, with capital still favoring AI-driven equities and earnings momentum over non-yielding assets. Persistent range-bound behavior in long-term yields since 2022 reflects an environment where macro signals are less directional than sentiment-driven. Inflation dynamics, increasingly measured through trimmed and median readings near the 3% zone, indicate cooling pressure beneath headline volatility, even as short-term spikes in rates, including the 13 basis point move pushing 2-year yields to 4.17%, amplify noise. With nearly half of policymakers still projecting additional tightening, uncertainty remains elevated. If earnings momentum fades in the coming quarters, capital rotation could shift toward undervalued risk assets, creating conditions where Bitcoin benefits from a repricing of liquidity expectations and reduced pressure from high-growth equity dominance. Do you think Bitcoin will outperform AI stocks if earnings growth slows, or will liquidity keep flowing away from crypto? Markets are at a turning point where one shift in liquidity could redefine winners and losers. Share your view in the comments, subscribe for more deep market insights, and stay ahead of the next move.